Good morning. When Indonesian President Joko Widodo came to power, he set himself an ambitious target. He wants 7% growth by the end of his term. 2 years in and 3 years to go, he's still struggling to get there. But it's not entirely his fault. Circumstances have changed. China is slowing down. We have commodities rout. And look at where the global economy is right now. Seems to be stalling. And of course, Brexit happened. All sorts of uncertainty in the UK, within the Eurozone, and we still don't know what's going to happen. So Indonesia finds itself in a situation where revenue has fallen short. That's prompted the government to cut spending. And Bank Indonesia, the central bank, has had to cut its growth projection for the year. Now, investments from within and from outside have become critical. And the onus, the burden, falls on the man next to me. Tom Lembong, the newly minted chairman of the Investment Coordinating Board, the former trade minister of Indonesia, and I'll have you know that within months of assuming his position, he opened up dozens of sectors to the private sector, so he's the right man for the job. Tom, good to have you with us.
Thank you so much, Haslinda.
We know that President Joko Widodo is a very, very tough master. What projections did he set on you?
Well,
and how quickly does he want you to get there?
Well, of course, very quickly, being President Jokowi. But like you said, Haslinda, we face a pretty sizable challenge, as the economists among us can share, right? Sorry to bring us back to our Economics 101 textbooks, but in national bookkeeping, GDP consists of 4 components: C plus G plus I plus exports minus imports, right? Consumer, government spending, investment, and net exports. Some panelists already have alluded that global trade remains soft, so exports are weak. You've just mentioned that revenues are falling short, so government spending has to be cut. Some of the other panelists mentioned that consumption is actually still very strong, right? But that probably means we can't push it harder unless you want, for example, a consumer debt explosion. So the only lever left at the moment is investment. Now, having said that, the difficult situation that we face and the rolling crises, if you will, European sovereign debt crisis, commodities price collapse, Brexit. I actually take a more sanguine view on this whole situation. In Indonesia, we have this famous saying, good times lead to bad policy, and bad times lead to good policy. Frankly, for example, I was brought into the cabinet last year to be trade minister, as you said, at a time when, we were in the midst of that renminbi shock devaluation, and oil price was still headed down. Our currency was under pressure, and that's when 1 month after I joined the cabinet, we launched a major deregulation campaign. Right, that's
Big Bang liberalization, they call it.
Exactly. Well, we prefer not to use that word liberalization anymore, but we prefer to say modernization, right? But yes, that led to a total U-turn on our trade policy, which I'm happy to report will continue under my successor, towards dismantling protectionist measures, towards reaching out and completing trade agreements with the European Union, with Australia, and yes, as and when, with TPP. That led to the opening of dozens of subsectors to.
But what can you do differently, Tom? Because when you take a look at the investment climate, it's very difficult. I mean, investment growth down to 12 to 14% from 17. Indonesia is losing out to smaller rivals like Vietnam. It's lagging behind. I mean, how can you do it differently to ensure Indonesia becomes a more attractive destination?
Well, the answer is both simple and hard, right? And in a word, it's about reform. You know, President Jokowi has mentioned in a number of speeches, you can almost divide the world, you can almost divide the emerging markets, certainly, into two baskets. Those that want to reform and those that don't want to reform, right? And he said repeatedly that we can assure you that Indonesia will be in the group that wants to reform and is reforming.
The question is how fast?
Look, I've been very open in public that our reform process, like anywhere else in the world, will be like 3 steps forward, 2 steps backward, right? It's not going to go in a straight line. We're going to have setbacks. I also believe that that social change on the scale that the president wants generally happens on what I would call an S-curve. Yeah. So at the beginning, it seems like we're pushing and we're pushing and we're pushing, and it seems to be going so slowly, or, gosh, it seems to be so difficult, right? But I do believe that at some point you hit a tipping point. You know, I call it the tomato ketchup bottle effect, right? You shake it and you shake it and you shake it, and nothing's coming out, right? And then suddenly the whole bottle comes out.
First such analogy that I've come across.
So, sorry, maybe tipping point is a more technocratically acceptable term. But yeah, I think the key is not to lose momentum. The key is to persist and maintain, and if possible, push ever harder. And I do believe you do hit a tipping point at some point. I mean, look, you mentioned we're losing out to regional neighbors, such as Vietnam. I would say that Vietnam is an overnight success, 9 years in the making. You know, the success.
You're saying people don't see the 9 years; they just see Vietnam opening up.
Look, I remember. I think many of us remember a time when there was the initial euphoria about Vietnam, and people were flooding in, and people were raising lots of capital, and so on. And then there's some state-owned enterprises that went bankrupt. I spoke to one Fortune 100 multinational just 3 days ago about Vietnam, and they told me, yeah, actually, first everybody sort of excitedly came in, then 4 years later, disillusionment set in, and people were disappointed. Gosh, this is not going to happen now. But then only 2 years after that, Vietnam stunned everyone by completing a free trade agreement with the European Union and simultaneously being one of the 12 founding members of TPP. Right? So I think, as I said, reform processes don't happen on a straight line. There'll be sort of ups and downs, 3 steps forward, 2 steps backward. But the key thing is the internal momentum, right? The overall thrust, the trajectory. And of course, as investors, as business people, we have to invest on a forward trajectory basis, right? Like to quote hockey legend Wayne Gretzky, I skate to where the puck is going, not to where the puck is at the moment.
But numbers don't lie. When you take a look at the survey of the ease of doing business, Indonesia still stands at about 109 out of 189. And Jokowi has said that he wants Indonesia to be in the top 40. That's climbing 69 notches by next year. How realistic is that?
Haslinda, thank you for teeing up my answer very nicely. I think, first of all, I really want to emphasize, I really believe that the numbers don't tell the whole story, number one.
I thought numbers don't lie.
Yeah. And number two, again, the important thing is the trend, not the snapshot, right? I think the second point first, the important thing is a trend. Thanks to the initiation of the reform process, I believe the currency has come roaring back. I mean, of course, Fed on hold has helped a lot, no doubt about it. But I think confidence is returning, and the economy is responding. So, after 3 years...
Why do you say that? What anecdotal evidence?
Sure. Well, since you're insisting to stick on the numbers, right?
We are Bloomberg after all.
Yes, you are Bloomberg after all. So 2012, 2013, 2014, even in 2015, we had 3 years of slowing economic growth in a row. Right? So we had 3 consecutive years of slowing growth, and people were wondering, where's the bottom? Right? When is it going to stop? Is it going to stop at 3%, 2%, 1%, -1, -2? Well, one thing that's definitely happened is we stabilized and started to rebound. Right? So basically, we hit bottom at 4.6 annual growth. It then rebounded to 4.9 and 5.1, back down to 4.8, and now back to 5.18, right? So the first thing that the numbers do show is stabilization, right? And I think before we engineer a rebound, we've got to stabilize first. That's number one. Number two, again, the trend. Broadly speaking, there's enough statistics indicating that we are speeding up, right? Now, again, the cutbacks in government spending won't help, but confidence has come back dramatically, and that should lead to a compensating increase in investment, which is what we need, right? That's what the president's always been talking about. You know, we've got to shift from commodities and export, commodities and frankly consumption to investment and production. And I think the weaker exchange rate, the deregulation reforms, progress on ease of doing business are facilitating the shift towards a more investment-led recovery. That's number one. Now, number two, the numbers don't tell the whole story. Look, to use a simpler example, right? Everybody's fretting that China's economic growth has gone down from whatever, say 7.5 down to 6.7, right? But in my view, people are not giving enough credit to the fact that 6.7 is happening with a lot less pollution, a lot less corruption, and a lot less misallocation of capital than the 7.5 we had before, right? So in my view, that's a much healthier 6.7 than the previous 7.5. Now, similarly, I know in a Bloomberg-driven world, we just look at the headlines flashing by, right? We're all on Twitter, right? The tweets as we go, but again, as policymakers, as corporate leaders, as investors, we've got to dig a bit deeper here, right?
Are you then saying that we shouldn't be disappointed if Indonesia does not reach that 7% target? Because when you take a look at indicators, no way it's going to get there.
First of all, one thing that that all of us, even those of us closest to him, always do is we always underestimate President Jokowi. Right? If we were sitting here 2 years ago, you would be grilling me on the fact that he's got a minority in parliament, right? That the rupiah is weakening, in fact, collapsing. That he's an outsider who will struggle to fully control the system. Well, now it's 2 years later, he's gone from 43% in parliament to 68% in parliament, right? His approval ratings, which when he took office were, low 70s, plummeted down to the 50s, have now rebounded to the high 60s, right? The currency's come back. So, we enjoy playing the underdog. But yeah, and I have to be honest, Haslinda, you might remember, right? When I first took office a year ago, I was a lot more hesitant. I was a lot more hedging and cautious. I was a lot more negative and paranoid. Now I'm actually, well, certainly easily the most optimistic that I've been since President Jokowi took office 2 years ago.
And speaking of being optimistic, you're also upbeat about the US economy. Why is that?
So, again, I think maybe partly to make this session worthwhile and interesting, let me be a bit contrarian and even a bit cheeky. Yeah. So first of all, I think regardless of whether Mrs. Clinton wins or whether Mr. Trump wins, I predict a return to greater deficit spending in the US, which in my personal view is precisely what we need right now. We need to start moving away from the austerity policies that have plagued the world for a number of years, especially in those countries which, Martin Wolf of the Financial Times so colorfully calls the true sovereigns. Right? The true sovereigns are the ones who can print money, right? The dollar blocked the U.S., Japan, but yeah, I think. I predict a gradual abandonment of fiscal austerity, starting with a new leadership in Washington. Number two, again, just yesterday morning, The Economist magazine published some very encouraging statistics in my view. Even though inflation might be running 1.5% and GDP growth might be running only 1.52%, I think I should look this up, but I think employment compensation costs are up 3.2%. And I think household median income, let me see, the median real household income grew by a whacking 5.2% in 2015, right? So what's actually happening, right? So I appreciate Chairman Jacob Frankel's comment a couple of hours ago, don't throw out the old textbooks yet, right? I believe that the monetary policy is actually working, right? Just persist a little bit more, but already in the USA, in Japan, labor markets are tight as a rubber band, and you're starting to see wages creep up. Now, that's bad for corporate profits, right? That's bad for inflation, but the other costs are still deflating, right? We have powerful deflationary forces in the world today, and some other panelists in the previous panel mentioned about technology, right? And the powerfully deflationary impact of technology, right? But wages are finally rising at a rapid clip. Now, somebody
for Indonesia, that's not a good thing, right? Because when you take a look at wages, up about 12% since 2011, if I got that right.
Well, no.
And productivity is up
Right.
on average only 4%.
So what I'm talking about is wages in the rich world. Wages in the USA, followed hopefully by wages in Japan, followed hopefully by wages in Europe. Again, as labor markets tighten. And again, it's funny, the wage increases are most pronounced in the working class. Barbers, gardeners, security guards. So basically, I remember 7 or 8 years ago, we were all fretting about outsourcing to India, to Philippines. It's, causing wages to fall in the working class. And I remember, if you remember, we used to say, well, you cannot outsource a haircut to India. You cannot outsource your gardening to India, right? And it's finally happening. I think the economy is finally responding to the powerful monetary medicine that's been dispensed. And we're gonna go back to the old system, right? My shorthand for it is back to Reagan and Thatcher. Basically, deficit spending. Basically consumer spending, so twin deficits, fiscal deficit, trade deficit. What will happen with rising incomes in the working level, in the middle classes, is they will buy more, spend more. That means more imports. More imports from Korea, more imports from Japan, from Taiwan and China, and that will filter its way through the global supply chain. Then China, Taiwan will import from Southeast Asia.
Try to quantify how Indonesia will benefit from it, and how quickly do you see that happening?
So I'm going to do something very perilous, which is to forecast, to do an optimistic forecast for next year. I know that now for at least 3 years in a row, people like the IMF, World Bank have had to, repeatedly cut their forecasts. Right? The reality is always disappointed. But again, I think I will dare say that we're running out of things to break. A lot of the crises that people predicted have already happened. Or failed to happen. A mere 8 months ago, we were all sitting around places like this, fretting about how China's going to have a hard landing, and it's going to happen soon. Well, now I think it's been a soft landing. Now people are fretting about debt levels. But again, I think the numbers don't tell the whole story, or we've got to delve deeper. When I see all these numbers about Chinese debt, I tend to see gross numbers, not net numbers. The net numbers are not as scary as the gross numbers. But, another point, it's funny. I think this morning, some of our colleagues stole my thunder on complacency being our number one enemy. I was going to use that punchline. But if you think about it, crises can be our friend. Crises are preventing precisely that complacency that is so dangerous, right? I think, again, to my Indonesian saying, right, good times lead to bad policies and bad times lead to policy. Look, if the rupiah was not under pressure, if the economy wasn't difficult, we wouldn't be reforming. Or if I can, somebody mentioned Alan Greenspan. If you think back to the global boom, right? What at the time was called the Great Moderation. Everyone said, oh my God, it's a new era. We've mastered the world economy, and a huge amount of complacency set in, right? Volatility was at a remarkable low. Everything was very tranquil. And that, of course, precisely set the stage for the global financial crisis, right? So I think rolling crises are keeping us on our toes, and I think serve very usefully as a wake-up call to us policymakers.
You said you're
and
optimistic.
leaders.
You said you're optimistic about next year. How optimistic? And why should investors be getting in now? Why shouldn't they be
Right.
sidelined and wait for greater clarity in terms of policies and in terms of where growth is headed
Right.
in Indonesia?
Well, a couple of things, yeah. First of all, don't get me wrong. I'm not saying we're gonna do like a, a hockey stick takeoff type, rocketing takeoff. But I think the flip side to the useful wake-up call, paranoia, desire to reform is, probably a bit too much pessimism. I'm not saying that it's not warranted. We need vigilance. We need to be cautious. We need to maintain a reform momentum. But I think things are looking better than I would have expected 12 and even 6 months ago. So I just see a continuation of the current trend. I think GDP growth in the U.S. will move towards 2.5. Wages will continue rising or galloping at the current rate, and to trickle that down to China and then from there Taiwan to Indonesia. I think we'll continue moving up towards the 6% handle on Indonesia's GDP growth. So we've gone from 4.6 to 5.2 today. Next year in the budget, we're being very conservative. We have a very technocratic, legendary finance minister now from the World Bank, Sri Mulyani. She's putting a target of 5.1. But I see every possibility of us this time being able to surprise to the upside.
There is a sense in the market that Indonesia tends to flip-flop on its policies. I mean, on the one hand, it says that it is open for business. On the other hand, policies are in place to shut certain industries. What message really are you sending? Is Indonesia open for business?
I think reform anywhere in the world will always be a kind of a struggle for the soul of a society, right? And there's always going to be a tug of war between different factions. The question is, will the reformist camp win, or will the reactionary or the stick in the mud, conservative camp win? And I would argue that right now the reformist camp is winning. I think one thing I have to emphasize is we've had arguably 15 years of drift towards a certain kind of direction, and now we have to execute a huge U-turn, from inward-looking protectionist to outward-looking, open, and so on. And I think I'm delighted that President Jokowi is starting to tackle the root causes. There's this great Ralph Waldo Emerson quote: "For every 1,000 people hacking away at the leaves of evil, you've got one person hacking away at the roots of evil." And and look, we're dismantling trade protections. We're just in the last 6 months, we've canceled 3,000 district government regulations, right? But
you've also imposed higher taxes on imports.
In certain sectors, right? So you're right. It's a bit of a whack-a-mole, right? Like things are still popping up. But that's precisely the point I'm getting to, which is we're now starting to tackle the mindset in the bureaucracy, right? Because unless we do that, for every 1,000 regulations that we cancel, another 1,000 will spring up. So I think gradually, after trimming the worst excesses, we're now able to move to the more fundamental root causes, which is a mindset, which is a culture in the bureaucracy. So I think bureaucratic reform is coming up very fast on our agenda.
So you're pretty upbeat.
Well, yes and no, right? Don't get me wrong. We face a massive challenge. Just now in the holding room, you asked me, so how far along do you reckon you are in the reform process? And I will honestly say we're probably only 5 or 10% into it. We've got another 95% to go. But to link that back to your question, why should you invest now? Well, I would argue if you're going to invest, if you're going to wait until we're 100% done, then probably
And
by
you
then
said
it's too
you're
late.
only 5% in.
Well, but that's a great starting point, right? I think...
Depends on your risk appetite.
Well, and also depends on how visionary we are as leaders and investors, I would say. Again, I recognize, and once again, it was the subject of the previous panel, how we're all under so much pressure in the here and the now. The short-term results, the quarterly results, show me the money, activist investors. But I think we all owe it to each other. And one panelist used pretty stark language. If the world's going to make it, if we're going to survive, we need to go. We need to make some bold measures. We need to be a bit more visionary, and go against the grain. Take some risk.
There's a question here from it's anonymous. Populism and income inequality has been discussed extensively during this summit. Is this something Indonesia worries about? What is the Indonesian government doing about it?
Haslinda, it's something that I've been pondering quite deeply for a number of months, right? Brexit, the rise of populism, and I think definitely we're in trouble, right? And when I say we, I would address us, all of us here in this room, as the global elites. I think we, the global elites, have lost, are rapidly losing the public's trust, right? and all these outbreaks like Brexit are a protest vote, right? I think two things. First of all, one question is, are we going to listen? Right? Are we finally going to listen? And number two, funny thing, again, I promise to be contrarian and cheeky to make this session a bit more interesting. But I think, ironically, for us to make it, to survive, number one, we need to become less technocratic. We need to become less smart. We need to start talking like normal people. We need to start talking like real people. And maybe it's a bit dramatic in my case because as trade minister, I came to these trade ministers meetings like the G20 and APEC and so on, and our discussions were filled with jargon, abbreviations like TTIP and EGAs and NTBs and the like. And I think we've gotten a bit lazy. We resort to all these abbreviations, and we've got to start talking like real people. And to be a bit cheeky, since we're all here together at this conference, I would actually say we've got to spend less time with each other and more time with our people. And I would argue that President Jokowi is leading the way. He's famous for spending only Monday, Tuesday, Wednesday in Jakarta in cabinet meetings and at his office and so on, and Thursday, Friday in the field. And not just in the field, he's on the farm with the farmers, in the slums with the people. And more important than that, he says very little. His ears are wide open, and he listens very closely. Right? He listens to the people. I think, a lot of times, look, the problem with us, Haslinda, all of us here, is we're all the product of a success culture, of a system that promotes success, right? So all of us are in the habit of talking a lot, of being very smart, right? But maybe we're not enough in the habit of listening. I see all the populism outbreaks and these crises as an outcry. And yet again, I'm not convinced that we're getting the message. I think we need to spend less time, with each other or in our air-conditioned offices. And I recognize how this looks, right? Sitting here with my Ferragamo tie at the Shangri-La, and more time with the very people who are expressing their frustration and their powerlessness and their worries.
So you're saying Indonesia is addressing the issue?
Well, by coincidence, our people have elected into office a person who is remarkably humble, right? Who's remarkably down to earth.
How is that inequality gap being bridged? What's in Indonesia?
Well, first of all, again, don't throw out the old textbooks just yet. President Jokowi has gotten to where he is today in part by implementing some very orthodox reforms. He cut our wasteful fuel subsidies by 80%, freeing up about $15 billion of fiscal space per year that he's spending on social programs in healthcare, education, infrastructure. And as a result, for the first time in 15 years, our Gini ratio has fallen year on year. So inequality is actually shrinking now. Now, how sustainable that is, and so on. But again, his approval ratings have rebounded. At a minimum, the trend is our friend now, right? Like we're headed in the right direction, and people see it, people appreciate it. And look, they don't necessarily will sit there and work out all the numbers. Oh, this much in fuel subsidy savings translates into this many kilometers of toll road and so on. But they see the president's sincerity. They see the president's humility, right? They see how he cares about them. And sometimes I worry we don't show that enough. We're so technocratic, we're so Davos, we're so successful, but I think the people just want to see that we actually care, that we have a heart. I think we need more heart and less head going forward.
Tom, there's a question here from Rachel Ng, Wong Partnership. What priority areas, sectors would you focus on in the next few years, and what challenges would you face?
Well, I think a few things here. I touched on change in mindset, right? Change in mindset, and I also touched on more heart, less head. And I also mentioned earlier, the numbers don't tell the whole story. I want to, for example, as chief of investment, I want to move a bit away from the headline figures, right? Like, we've had this habit of focusing, how much is the total investment? How much is it going up by, right? Just now you mentioned, the growth rate has shrunk from 17% to 12%, right? But one of my hopes is to actually humanize investment.
How do you do that?
Look, by telling stories, right? By getting down to the stories of the person in the street, of the person in the village. Look, one of our big exports, for example, is coffee, right? As trade minister 5 months ago, I took a little propeller plane to a very impoverished district in the mountains of Papua. Arabica coffee, the higher the altitude, the sweeter the aroma. So these are grown in mountainous regions which tend to be very impoverished. And I went to the coffee house, which is a wooden shack, and they're still using equipment left there by Japanese missionaries in the 1970s, right, to process coffee cherries into coffee green beans, which is a very time-consuming and labor-intensive process, for which, ironically, the farmers get paid very little. I would value that. I would value a $25,000 investment to upgrade that coffee bean processing machinery and improve the livelihood of the farmers, as much as I would the $1 billion investment in a petrochemical plant. I think we've got to start humanizing investment and policy, and it can't. The danger in the era of social media is it's got to be sincere, it's got to be authentic. It can't be for show. Like people will pierce the veil of insincerity and inauthenticity in a heartbeat. And then you'll get bullied like crazy on social media.
But realistically, in the end, it has to be in industry sectors which would produce jobs.
Of course. So that's a great example, right? So one thing that I said in my Twitter feed, right, is we've got a balance between the capital-intensive industries, which we absolutely need. Basic industries like steel and petrochemicals, which we are. We're attracting billions of dollars of investment in petrochemicals and steel, so we'll import less steel, import less plastics in the future. But we also have to balance it with smaller investments that are going to create inevitably less impressive headline numbers in more labor-intensive industries, right? So getting that mix right is a big policy priority for me and for the economic team. And again, deregulation. We've got to continue to deregulate. We've got to continue to make things easier. Excessive regulation hits small businesses the hardest. They can't afford armies of lawyers to cope with mountainous regulations the way big companies can. So as I said, it's not. Look, actually all of us know what needs to be done. Question is, do we have the political will? Do we have the stamina to do it and to keep doing it and to keep pushing it harder and harder? But also, I think to get the public support for what we're doing, right? To get the public to support all this foreign investment coming in, including an influx of foreign workers and foreign technicians, we've got to do it through stories that they can relate to, right? Like the people who are supporting us through the political system are not going to relate to, oh, this $4 billion petrochemical plant will help us cut petrochemical imports by $400 million per year. That means nothing to them, right? But stories like the coffee farm in Papua or, the jewelry factory in East Java that now can export, those are stories that can relate to. I think what I see as a challenge for the next 4 years is a communication challenge.
It's a globalized world. What role do you see Indonesia playing in the global economy, considering that by 2030, it is poised to be the 7th largest economy in the world? And if you believe Mike Milken, he says it's going to be the top 5.
So, it's funny, an example of the tremendous mindset change that President Jokowi has brought to Indonesia. If you rewind to previous administrations, our speeches would tend to be about that, right? We're the 4th most populous country in the world. We're the largest Muslim population on the planet. We expect to be the number 7 or number 5 economy, whatever. You can watch any of President Jokowi's speeches on YouTube. He'll spend about 10 or 20% of his time, praising or talking positive, and about 80% to 90% of his time criticizing, complaining, right? Saying, guys, we're still too slow. Guys, we're still too bureaucratic. Guys, our competitor countries, our neighboring rivals, they're overtaking us. We're being left behind. So that's a very drastic change in mindset and attitude. We used to be, to be very blunt, I think we used to be a bit too proud, right? And I personally think one of the president's secret weapons is his humility. His humility enables him to break taboos and just tell it as it is. We have fallen behind. We have to catch up. We have to improve.
Is Indonesia ready for the 21st century?
Right now, no, definitely not. But again, I think the trend is there. And secondly, I'm happy to report that even after the successes we've had, and my colleague from Indonesia, Patrick Waluyo, I will concur with his point earlier that the historic tax amnesty will be successful. But I'm happy to share with all of you today that far from making President Jokowi breathe a sigh of relief and want to sit back and slow down, right? He's only emboldened to become even more ambitious. We're now working on the next batch of reforms. I'm not at liberty to leak today what those are going to be. Stay tuned. But I'm delighted to note that they're even more ambitious than everything we've seen today, until today in the last 2 years.
The journey's only just begun. There's a long way to go, but it is, according to Tom Lembong, on the right track. Tom Lembong, we thank you for your insights. Ladies and gentlemen, please